Good morning, this is Butch Shorrock for Options University. It's Friday, July 27th, 2012, and welcome, ladies and gentlemen, to the market that took place during this past week. And as we look at this, let us first consider the fact that access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. And we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And with that thought, let's take a look at the last 4 days, coming into Friday and the weekend, in this end of the July trading session. And we see that as we look at this last week, we were in a down cycle in the market, in what was basically an uptrending market, giving us higher lows and giving us higher highs. We lost some of our steam on this high, and we lost some of our steam on this low, and we see that we began to pull back, and there was thoughts that we might be looking at some kind of pullback in the market. Well, we did pull behind those diagonal lines that we were talking about. We saw a doji on Wednesday right over there, which showed us that the market was basically having some kind of support at this level, all right, which was lower level than it would have expected out of an uptrend. And then Dracht came out in Europe talking about the euro and the support that the European banking, the ECB, was going to give to the Spain, and whatever was necessary is what he said. That's what would take place to keep Spain in a position of viability. And the market at around 6 o'clock in the morning Eastern time did a complete reversal. It was down. The Dow was down about 45 points going into 6 o'clock, and within seconds suddenly they made an 80-point turnaround as the market was heading up. And we saw this big day took place with a nice big gap up where we reached 1360 for the day. Now the real question is, where are we going? The interest part is, what is the market doing? It is cycling basically sideways. In order to really have something, we've got to break above this level with some kind of volume, some kind of gusto. Otherwise, we're just in a narrowing range for a sideways trending market. We'll find out in the next 2 days what's going on. Here we are, the end of the month of July. Here we are, time for some window dressing. If it's going to pop, this should be the time that it would pop. But what does August typically bring us? Well, from 1901 to 1950, August was a big month for the market, because what we saw take place during that time was a lot of money came into the market because 85% of the population were farmers. Well, we don't any longer have that kind of background taking place in the market, as we see August one of the worst performers since 1987. Now, things have contributed to that since 1987. Some of those things are turmoil in Russia, Asia currency crisis, long-term capital management hedge fund debacle, which took place in 1998. Dow shed 6.4% in that just one day alone. We saw that other things happened. Saddam Hussein triggered a slide in 1990. And so, these things are things that typically have really caused August to be kind of a sick month. At this particular time, what do we have going on? Well, we've got the euro going on. We've got the European crisis. We've got the European debt crisis. We've got decreased revenues coming out in a tremendous amount of the earnings that have come out. Our corporations have responded very well, but we're not showing any great growth, and expectations are that as time goes on, we will see things slow down even further. So, is this the time for the market to explode? Probably not. Will it? Well, we're supposed to trade what we see, not what we think. And right now, we are in an upcycle, heading for our previous resistance, which is up there at about 1380. So keep in mind that we're just cycling in very, very tight ranges with big moves on a daily basis in the S&P. Let's take a closer look at it in a magnified view, and we see that we were in a down cycle. All right, the low took place on Tuesday. On Wednesday, we had our doji, which was a reversal pattern. And then what we saw is we saw that news come out, market poised and ready to continue its cycle by going back up. But because of that news overpowers everything. We ended up with this huge day up. 9 out of 10 sectors in the Dow were in positive numbers as we saw this nice big move in the Dow, 22 points in the S&P, and things moving up with much vigor. All right, what can we expect on Friday? We can expect possibly a little bit of certainly don't expect another big candle like we got on Thursday, but we certainly can see a continuation. We can see a sideways pause, digesting as much as a 50% retracement on Thursday's candlestick certainly would still be bullish, as we're sitting well above the 30-day moving average, and so we'll see whether we continue on up. Notice we have the 30 above the 50, which is above the 200, which is a bullish sign for the overall market. But remember, the woes of August seem to come upon us more than we want to talk about. Now let's take a look at some of the other indexes, see if they followed the same pattern. Dow gave us a bit of a hint there with our upward candlestick that we were going to head up. Dow still trading within its zone, but highlighted for you, and I hope you enjoy these yellow highlights to show you what pattern and what particular area we're investing in. Notice we have a single top, we have a double top. This is headed for a triple top. Could it be a triple top with a breakout? Well, we'll see. Does the breakout mean anything? Only if it takes place with big volume. So we'll see what happens as the market responds. Watch that first hour this morning. Look for the opening high, opening low to give you an idea whether it's trading above that opening high or below that opening low as to where the market's going for the day. Expect for Friday a smaller trading range than we had on Thursday. NASDAQ, not showing us the same kind of strength, not showing us much of anything as far as the NASDAQ showing us and keeping up with the overall markets. Notice, big move out of the NASDAQ on Thursday, but it's still well below the strength in the Dow. Only 30 stocks in the Dow, but our tech has not made the move. It is not leading us up. Same with the Russell 2000, as we see that the Russell 2000 is basically barely above the 200-day moving average and not showing us the same strength that we see. Watch the Russell today. It may give you some kind of an indication, because all you got out of the Russell yesterday was basically almost a doji, kind of a spinning top, and looking very much like there's indecision in the Russell as to which way we're going. Again, an up day. All of the major indexes had up days yesterday, but none of them showing the same strength that the Dow and the S&P showed us. We saw the VIX retreating. We didn't hardly get outside of our zone, as we have now retreated back into the zone. As the market goes up, the volatility tends to go down, and we see that the volatility did just that, as we're kind of in the middle range of our normal trading range for the fear index for the overall markets. Bonds had its breakout, didn't continue on up, but again broke into higher highs as the bonds really showed us what a leader they've been the last couple years. As we look at the financials, the XLF, we see that it's trading right in its trading zone, and a nice move up. This looked more like the NASDAQ, more like the Russell than it looks like the S&P. Well, that's not really fair, as we see the 30 above the 50, above the 200. So we are seeing some strength there, but again, we got that doji out of the XLF. We need the financials to keep contributing if we expect the market to have any kind of meaningful rally. Oil sat right in the middle of its trading area here. As we say, oil not moving much further based upon USO, which is our ETF, to give us an indication of what oil is doing. Looking at gold, we see gold rose with the overall market, heading into its the top of its trading zone. As we see, this hasn't been shaded in, but we see our yellow box where gold's been trading since basically around the middle of May. All right, and so we see the markets had a nice bounce on Thursday. We're looking for continuation on Friday. What kind of volume did we have in that big bounce in the S&P? Notice when we look at the SPY, we get a truer indication of how the market opened during trading hours as we see a gap that's sitting there. Those gaps will be filled. We're sitting at that resistance line on the diagonal of the SPY, and we'll see whether we continue on up or whether we stall out here a little bit before we continue. One would expect that we'll continue up into this area for that triple top, and then it's a question whether we break through. What kind of volume on the breakout on the big day? Above average. Probably not 1.5 times average, but again, above average as we saw good strength come into the market as the big boys entered back in this tight cycle that we're having here during the summer months, heading into August, which traditionally in modern times has been a bit of a sluggish, laggish, bad news month, and so just be aware of that and be aware of what history has told us and understand we might be getting great news out of Europe. How long does great news last? Probably not all that long. How long does bad news last? Probably a long time, as we've been seeing from the news that we're getting out of the Euro complex. So with that in mind, this is Butch Shorrock, and we're going to, for those of you that are gold members, we're going to go through our stocks to watch, see what kind of effect that we had, as we're seeing some rotation take place in many of our stocks that we've been following for a long time, as we're seeing them lose some of their glamour, as we're seeing decreased revenues. Remember, these are stocks that are basically highly valued, high PEs, and so if they miss earnings, they're severely punished them. And if you don't believe it, take a look at that chart on CMG and see what that truly means. So with that thought in mind, for those of you that are not gold members, thanks for being here. If you'd like to see more free videos from Options University, go to www.optionsuniversity.com/freegold.com. All right, with that, thank you. By the way, that URL, that address will be at the end of this video. So please copy it from there. And for the rest of for the gold members, I'll be back in just a minute. And this is Butch Shorrock, Options University. It's Friday, July 20th, 2012. Thank you for being here. To our gold members, welcome back. It's Friday, July 20th, 2012. And as we take a look at the SPX, we see that our expectations for Friday are for higher highs and higher lows. Now, we could just end up with a bit of a trace back. We could end up with a very small move. Notice the length of this candlestick. We could end up with a shorter candlestick. Wouldn't expect two big days like that in a row. We are at window dressing time, so we saw a bit of that taking place yesterday. Could see a bit more today. And we don't have the 1st of August until next week, so see whether we get some window dressing. We broke through this area at 1358.79, so that's now support. And we see that our first level of resistance is 1362. Could very well end up there today. And we're heading up for that 1380 area, which we saw on the chart right around there, as we have areas above us of resistance. If we break through that, pretty much can think that we're going to hit 1400 and maybe move our way up if we break out with a volume. If we don't break out with volume, we could see a very short stunted breakout just like we saw here, which actually closed in our yellow zone. And we see our yellow zone has widened some as we look at our summer trading range. Wouldn't be totally abnormal this summer yet to see this market pull back, as it does many times in the cycle before we go into the fall rally. So be aware of that and understand that there is more danger to the downside in this particular market than there is to the upside as we look at global news, as we look at the influences that are taking place with the overall market. So just heed that and understand where your stops are going to be, no matter which side of the market. For those of you that are doing condors, again, you got more risk to the downside than the upside. So with that thought in mind, let's go ahead and continue and look at some of our other companies. We see Amazon is having earnings, really is sitting absolutely nowhere, and we'll see what happens as the market reacts to those earnings from Amazon, as Amazon has been trading in a sideways trend for the last 3 months. Let's then take a look at Apple and see what our friend Apple has done, which missed earnings, missed revenues, didn't participate yesterday in the overall market, showed weakness to the overall market, but at the beginning of a rally, Apple often does that. So now what's the story on Apple? Well, it'll depend whether people think that Apple actually is a good buy at this price and it's a buying opportunity, because it missed both revenues and earnings as we saw Apple come out with its revenues and earnings. So it is not exactly the same company that it was before that little telephone took place there, which, remember, news can overpower everything. Still one of the strongest companies out there. What's bad to say about Apple other than they miss this fictitious numbers? So we'll see how Apple responds to that. Watch carefully. If it pulls down strongly with the market, that means we're going to find a new trading range for Apple. So far, sitting smack dab in the middle of that trading range. Not much of a reaction to all that bad news is. It was down only about 5%, but did not contribute yesterday to the market run, as we saw our red candlestick in that big candlestick in the Dow and the S&P. Apple, a stock to watch. AutoZone, see that it had quite a range yesterday, but as the day went on, the bulls stepped back in. So we'll see if AutoZone continues on up and if with the overall market heads toward that 390 area. Watch for higher highs and higher lows. This is how you determine where your entries are on these 3 to 5 day swing trades. Looking at CMG, missed earnings, badly punished, down as bad as I've seen anything get punished in a while, as it was down 89 points from there to there on earnings news, and has continued in its downward trend as CMG had spent so much time up there in that blue sky. We're now going to find a new position for it. By the way, this is no longer the CMG it used to be. There's the news. Look at that volume. That volume isn't designed by us. That's designed by them. And there's the big tip-off. So if you see any strength come into CMG, and then you start seeing lower highs and lower lows, it's time for you to consider some kind of bearish strategy, as this stock is not the same stock it was before earnings. Here we are, August 2012. As we see, Google went up, ran into earnings. Very nice little run up into earnings, reported nicely, continuing on up. Did not necessarily take place with what the overall market did, but remember, it was already near its highs. And so we see that Google's trading in that trading zone. Remember, looming over that is that shareholder lawsuit that's sitting there as we move into the fall. That should become rectified, and then Google can be more free dealing than it is right now. ISRG, can earnings change the complexion of a stock? Earnings after the market, next day, gap down. Will that gap be filled? Most likely someday, as we see a little life coming into ISRG. Let's see if it has the power to come back to where it used to be. But we saw that we had an entry off the bottom off of ISRG as it's sitting below that 200-day moving average. Not a great place to be, but we'll see whether it picks up some of its previous strength. MasterCard coming into earnings, has not yet reached it, pulled back with the overall market, popped up with the overall market. This is one of them I told you to keep an eye on, as this would provide for you opportunities to take advantage of the overall market, as MasterCard could be ready for that run into earnings. So one could be bullish if the market continues up on MasterCard. McDonald's, earnings, not bad on the bottom line. Had problems with revenues, market punishes it, falls out of its normal trading zone, sitting at the bottom of that trading zone now, no longer near that glamour that it had all last year, as it will see whether it continues in this sideways trend. Nike is just doing it, just climbing steadily back up, sitting currently right now at the 50-day moving average. Nice big day yesterday with the overall market. What made this react so funny? Earnings. You start seeing lower highs and lower lows on this. This gives us a tip on what the overall big boys think about it, and they were concerned about these earnings, but it is climbing steadfastly up, trying to fill this gap. After it fills this gap, could go as high as this moving average. You might watch for a little pullback on Nike. Technically, that's what the chart would tell us, but this stock has had good resiliency through the years. Didn't miss earnings, but I believe it missed revenues as we move forward. Priceline coming into earnings, cannot yet see them on the chart. See it's highly valued. Did not participate in yesterday's market run. What is going to be the big problem here? What are our expectations? Mine? Just an opinion. Certainly no fact based in it. It'll do fine as far as earnings, and revenue forecasting will be uncertain, which to the overall market means down. Revenues will be short of expectations. The Euro crisis has hurt Priceline. They said that it would happen, which is why it's been trading this entire last quarter in a very, very tight range, popping up and down and playing with the overall market. As the overall market goes up, so does Priceline. Didn't get much of a bounce yesterday out of Priceline as we did out of the overall market, but you could see one today if the market continues on up. Watch for that higher high and higher low out of Priceline for your entrance for some kind of a bullish trade. Expectations, trading with this in this trading range, unless we get a breakout going into earnings, but we're not quite there yet. So this will fluctuate with the overall market, even though it's in a brand new trading zone. Finally, looking at WW Grainger, we're seeing some action out of this stock as we see that it had about a 50% pullback, and now we see it headed with some indecision to back up to the upside. Almost made it up to that high that we had after earnings. This is the exact opposite. Here's a company, not a glamour company, a workhorse company, who had great earnings, great revenues, great expectations. These are the kind of companies that you want to be bullish about, because this is a huge tip-off off earnings and what their expectations are. Wall Street likes these companies. They give them some level of safety. So with that, heading into August, remember, August tends to be the worst month of the year, so more danger to the downside than the upside. Does that mean we couldn't have an August rally? We certainly could. In fact, during election years, August is one of the stronger months of the year during election years. We are in election year. Yes, we are. A lot of uncertainty out there, though, so I don't know that the election is going to overcome the Euro news, the Chinese pullback, the recession in Europe, the problems with funding banks in Europe, the problems with banks here. Unless the financials contribute, it is very difficult for the market to run any direction very, very far and have these long-term breakouts. So with that in mind, this is Butch Shorrock. It's Options University. It's Friday, July 7th, 2012. Ladies and gentlemen, thank you for sharing your time with Options University.